Welcome to Investors Insights. Our topic today is Stimulus March Continues. I'm joined by my distinguished colleagues Bobby Norman and Trey Booth, and we've just had a great portfolio strategies meeting looking at the stimulus that Congress has passed, as well as how it impacts the markets, the economy, and you. So on that note, Bobby, I'm going to go straight to you because you brought up about last week and the information we were receiving and then what happened over the weekend as well.
Yeah, Greg, I mentioned last week how important it is that the economic reports come in strong over the next few weeks as higher rates are causing volatility to spike. And I want to focus on two reports last week. First one, the U.S. economy added 379,000 jobs in February. That's the biggest gain in 4 months. In it is what is hoped to be a preview of the surge in hiring in the months ahead as the economy fully reopens. Because just over the weekend, the Senate passed $1.9 trillion relief bill that is expected to be signed by President by March 14th. So with the stimulus passing Congress, we could see global GDP growth around 7.5% in the next few quarters. So Trey will be covering the stimulus bill in more detail in a minute, but we saw higher rate talk cause the market to trade back earlier in the week, but the positive jobs number helped the market have a great day on Friday. The second report, manufacturing activity grew last month at its fastest pace since the pandemic started. So the Institute for Supply Management reported its manufacturing survey climbed to 60.8. That is a 3-year high. So readings over 50 indicate growth, while readings over 55 are considered exceptional. So because of the 60 number being 60, that is phenomenal growth. So again, these economic reports will be important as ever in terms of showing that the economy is catching up with the markets and hopefully help drowning out the noise around higher rates.
That's an excellent point, and we're going to be talking about those higher rates as the next few weeks move along. And also we're seeing a lot of positive information. And Trey, with the information Bobby just gave, take that and talk about the stimulus in more detail and the impact it can have on the economy and the market.
What we've been watching over the last few months and really years is a give and take with the stimulus-driven market versus an economy-driven market. And you can tell the difference because when it's a stimulus-driven market, the market drops on good news. And what we saw on Friday was great because we got good news, as Bobby indicated, with the jobs market. And the stock market went up. So that means good news is good news. Now, why would the stock market have gone down with good economic news? Typically, the stock market drops when there's good economic news because it reduces the chances of stimulus. So on Friday, we really got both. We got good economic news and we got stimulus over the weekend. And as Bobby noted, President Biden will likely sign this stimulus bill by March 14th, which is the deadline for extending unemployment claims. So this stimulus has a lot of input into the stock market really fast through the consumer. That's the biggest push that this stimulus bill has on the stock market on immediate terms. And so the stimulus on unemployment claims is going to stop in March. But in addition, each individual household, if you make $75,000 or less as an individual or $150,000 or less as a household, you should receive around $1,400 in the coming weeks. Now, why is that important to the stock market? It's important in two ways. One, those checks could be spent, which can drive earnings. Estimates are about $4 to $5 worth of S&P 500 earnings could be improved per $1 trillion worth of stimulus that's spent. Also, in a recent survey by Deutsche Bank, individuals 25 to 35 are expected to put half or more than half of their stimulus checks directly into the stock market. So that is a huge tailwind of demand for equities in the near term. Once these stimulus checks hit people's bank accounts, people have been saving over the last few years. We've seen savings rates spike during the coronavirus crisis. We've also seen investment rates spike. And so this stimulus should continue to put fuel on what Bobby is indicating is an already burning economic fire. So this is positive on top of positive in a very short period. So we should see this really kind of boost in the short term, kind of get over the hump of higher interest rates.
Throughout my career, it's fascinating to me, an event here, a decision here, and the rippling effect that can have. And so the stimulus going to consumers is going to have a huge impact on this economy. And you're bringing out great points there. Also, Trey, I'm going to put you on the spot because you shared about what happened in Texas in relation to construction. Can you give us that information as another example that when things take place, there's a rippling effect that takes place.
Yeah, so as Bobby indicated, the jobs report on Friday was gangbusters, really outperformed expectations. But one of the unique parts of it was that construction actually was down. And through this pandemic, we've actually seen construction jobs maintain high levels and increase as home improvements have been done, home building has been high. It's one of the few hot parts of the economy throughout the entire 2020 year. So to see construction drop in what was an overall good jobs number seemed concerning, but the experts say it's very transitory, it's very temporary because of the state of Texas being pretty much locked down for a few weeks there. A lot of construction is taking place in Texas, but they were just effectively frozen out of the jobs market because of the weather. And so you saw that temporary drop, which could mean that next month we'll see a doubling up, which again is very positive.
I just want to emphasize to our viewers the importance of these vlogs to us and how we bring out these details of events and decisions being made and the rippling effect it can have. We're seeing a lot of positive rippling effects right now, and we haven't even mentioned about the vaccination of this country that's taking place, other things, the rippling effect that's occurring. A lot of positives out there. We're going to continue to bring you this information through our vlogs, also on the stimulus. As the weeks progress, we're going to be talking about the stimulus and how it relates possibly to you and your portfolio. We're also going to continue to keep you updated on social media, Facebook, Twitter, LinkedIn, our high-tech, high-touch approach to communicate with you in multiple ways so that you know about these decisions and about these events that are occurring and the rippling effect that's taking place. We hope you have a great week. We hope that you're starting to enjoy some springtime weather, and we're going to keep you updated as the month of March continues on and as the stimulus march continues. Take care.